Welcome to Yield Nerd, an educational show about how you can acquire and manage yield. All right, Yield Nerds, episode 139. I am looking at a completely new industry in this episode. It is space exploration and the stocks in that area. I want to see if I can find the next SpaceX in the making. I'll tell you all about it very soon. We are at 378 subscribers. Thank you for your support. If you're new, please use the playlist called the Income Investing Roadmap. And hey, don't believe what I say. Do your own analysis. And if you disagree, please share your thoughts with me so I can learn as well. Well, a couple of quick things in terms of how we organize today's show. We're going to look at the market temperature, and you can see space exploration going on right there in front of the New York Stock Exchange. And I'll share my thesis behind why I believe space equities are primed for a good return for investors now. And I'm going to go looking for the next SpaceX and see if I find it, and we'll see. And I will share my trades. My portfolio is what I would call the no drama portfolio. It's that little blue line. It just keeps going and going and going. And you can see how NASDAQ is having all these spasms along the way. And at least in the last 3 months, I've kept up with it. And I'll see if I can keep that going. So having said that, the reason I keep having that no drama portfolio is because only 2% of that portfolio is in equities. The rest is in fixed income. However, I am slowly moving into equities. As you can see, in the last 4 months, I have increased my equity allocation by 500%. Having said that, I'm still staying on the sidelines because I do expect some drama later this year in equities, and I'm waiting for it patiently. My asset allocation in the meanwhile is very strongly in treasuries, a little bit in investment grade corporate bonds. As far as my duration goes, I am staying very, very short. There is a small portion of my holdings that I put in the very long tail because I wanted to maximize income. But outside of that, I'm positioning for the end of the year drama, at least the way I see it. Now, space equities. What is my thesis behind it? I will share that with you. Before I go too far, I want to make sure you understand that what I'm going to share is not investment advice or tax advice. I am not a wealth management advisor. I don't have secret product to pitch, and I do not endorse politics or product. So my thesis for 2025 is as follows. I believe that discretionary spending is going to drop. Spending on essentials, meaning food, pharma, or national defense, and so on, those things are going to increase, and there may even be some inflation there. And unfortunately, we as a world are unable to live peacefully with each other. I unfortunately still believe that existing conflicts will continue, and there may be new conflicts, and so the country will need to increase its military capabilities. And this one is a different way of looking at what is already happening. Instead of looking at home building as the trigger for the economy, or instead of looking at climate change as its own thing, what I really believe is that because climate-related events are more severe and more unpredictable, the damage it causes is going to spur more spending in construction. If you don't believe me, go look at some of the recent storms that have come and see what it does to the localities. It's not a little gallon of paint that the homeowner uses in order to get their home touched up. They have to rebuild their entire home. And so my thesis for home building is not really in new subdivisions coming up and whether people can afford the mortgage. It really is climate-related damage, destroying properties and having to rebuild them, and I'll share more as we go along. Last but not the least, this is another thing I'm waiting for. I do believe AI and the high-flying tech stocks will find a new normal. My instinct tells me the new normal will be lower than where we are, and I'm impatiently waiting to get there. Hey, by the way, how about Lifeway, the kefir stock? The kefir stock, you may remember, I've been talking about that in my last 3 episodes. A quick victory lap. Kefir stock Lifeway was bought out. Well, not bought out. There's a proposal to buy them out by Danone. I exited that stock. I made a very nice chunk of change, and you can see that it went from right about $10 to $25 plus. You do the math. I'm very happy that I picked it at the right moment, and I did exit it. Maybe it'll go up to 50. Maybe there'll be multiple bids. Who knows? But I'm not greedy. I was happy with what I made, and I got out of that. So where does that leave me? I am fantastically out of balance. I have huge allocations to consumer staples, healthcare, and materials, and somewhat higher in industrials, but I have little to nothing on many of the other sectors, and we'll talk more about why and where I am in a second. But before we go further, I want to get back to space-related stocks. Now, why do I believe space-related stocks have a prime opportunity? And you need to do your own research. If you look at who NASA relies on in the private sector for space-related innovation, it's pretty much SpaceX and Boeing. And if you read the news, Boeing has its own leadership challenges, operational challenges. SpaceX has its own leadership challenges. Most likely not operational challenges. They are doing amazingly well in operations. But it does make NASA a little worried about, hey, are we relying a little too much on them? That is my instinct. And if you look at how wars are being fought these days, it's drones that use satellites and it's chips that jam other people's signals. We are heavily, heavily dependent on near Earth satellites. And so those two put together, I believe NASA will be looking to diversify who it works with. Not just NASA, but other countries have their own space agencies. They will start deploying their own satellites, and not all of them will use SpaceX and Boeing. So I believe there are other companies that will emerge, and I want to see who's there and put my bets on them. So who is the next SpaceX if there is such a company? Well, there are several candidates. You could argue Boeing will eat the cake in that. And Boeing is a major NASA partner, arguably a wonderful company. There have been some hiccups both on the commercial side and on the space side for Boeing. My challenge is their fundamentals. Their PE ratio is just not where I would like. They have a crushing debt. I actually own a little bit of their debt. I own a Boeing bond that pays 7%, and their stock price tells you the rest of the story. Down 60% over the last 5 years, down 40% just this year. I am sorry, Boeing. I cannot bring myself to buy stock in this company, assuming they are going to increase their market share and space-related spend. Then we go to SpaceX. Would love to buy them if it is an opportunity. They have an amazing performance record, except they are privately held. They may go public at some point. I don't know. We'll see when they do. They have a large amount of government grants. NASA is heavily vested in them, but they have other kinds of leadership challenges. And so if you are NASA, what would you do? Are you going to assume Boeing does this massive turnaround operationally and SpaceX doesn't have any leadership related issues and just bury your head in the sand and hope that the American space initiative moves forward? I would like to think that the US government and its space interests will be protected with greater vigor. What I mean by that is NASA will start looking for other players. So who are some of the other players? Well, there is Intuitive Machines. Intuitive Machines has a stated goal of putting people on the moon, and NASA recently gave them a contract. That's wonderful. You can see that just in the last month, their stock went up by 52% because they got that contract. However, if you look at it over a broader time period, you can see that it isn't exactly a Cinderella story in the sense that there is a very long path between now and when they get operational income. So right now they have a grant, they have to figure out how to get the spaceship going. There is so much more left between where they are now and operational recurring revenue. My instinct doesn't go there. So who else is there? I'm looking for a value stock, if you will, in space exploration, if there is such a thing. Well, there is Planet Labs. What does Planet Labs do? Planet Labs says, hey, we'll launch your satellites and we're going to give you geospatial data that says, here is how far your nuclear reactor is from the ocean or whatever it may be. And, they have minor operational problems. Let me put it this way, their stock has crashed and burnt about 90 something percent. so not my cup of tea. Then you go to Archer Aviation. Archer Aviation is also a very early stage company. They are in what are called VTOL crafts, vertical takeoff and landing. So these are aircraft that operate like a helicopter and fly like an airplane. Very interesting concept. They want to fly from Newark, New Jersey to JFK in 7 minutes or 10 minutes or something like that. I mean, these are fantastic concepts, but not exactly space exploration. They are not going to get NASA money anytime soon, and their stock price tells you the rest of their story. And so then we go to this company called Rocket Lab, RKLB. Rocket Lab provides launch services for other countries and other companies. They launch your satellites. They make parts that fit into the components of other countries' space organizations. They even make the satellites, they make the rockets, they make the short-range rockets, and they are also making the medium-range rockets. This, to me, at least in face value, looks like an early stage SpaceX. Stay tuned. Their stock, they had a few highs and it started crashing low. But if you look at the start of this year, they have seen a 60-70% increase. And you have to say, what's going on? Is that real or is it a flash in the pan? Well, they have a market cap of 4.3 billion. Their annual sales is only 400 million. So their market cap is 10 times revenue, which is very rich. However, they have 600 million of cash. So they're not going to run out of cash anytime soon. The other part, interesting part, is they issued a convertible preferred note last year, and that note matures in 2029. They can either convert it into equity or pay cash back. And you have to imagine if the company takes off, then they're not going to convert it into equity. But if it does take off, then they'll pay cash using operating cash. Speaking of which, there is real operating cash for this company. Look at that revenue. It went from 20 odd million 3 years ago to 100 million a quarter, 400 something million a year. And when I see operating revenue, I get excited. I want to know what kind of revenue it is. They are still burning cash. Their earnings are negative and the earnings are not falling in the sense that they continue spending cash. However, my humble opinion is that it still is a growing company. They're spending money on R&D. They're spending money on new product development, new kinds of heavier satellites so they can make more money. So their cash flow isn't turning positive. So, do your own research. Having said that, if you start reading their 10Q, you are going to see that they have two kinds of revenue. One that they charge when the satellite is launched, and the second that they charge as progress is being made and ongoing maintenance is being done. And they are going bonkers on both of them. 50, 100% increase in revenue on both of them. And you go, whoa, what in the world is happening? And you see who their customers are. Their top customer is MDA, which is the NASA of Canada, the Canadarm, which is connecting the space, space shuttle. They connected the space shuttle at one point to the space station. It enabled people to do spacewalks. The Canadarm was built by MDA. The Canadian Space Agency works with the MDA, and that is the largest customer for Rocket Lab. Their next customer is Japan's Earthquake Monitoring Service and Japan Space Agency. The third largest customer is New Zealand Space Agency. So what Rocket Lab seems to have evolved into is kind of a friendly country space agency supplier. And so if it is a US friendly country, Rocket Lab shows up and says, hey, we'll build you components, we'll launch your satellites. And they do a lot of Internet of Things stuff as well. So if you're driving a car and the car says emergency vehicle approaching, believe it or not, that is because your ambulance communicates with the satellite. The satellite tells all cars nearby using GPS that, hey, there's an emergency vehicle nearby. So there's a lot of interesting stuff that Rocket Lab does. They have launched 197 satellites, and about 1,700 are already in orbit. That's because some of them were launched by other people. And so this is starting to have some operational rigor. And so I started reading their 10Q in greater detail. There's a section called backlog. What is backlog? If you have orders in your books, that's why it's called an enforceable agreement. If you have orders in your books that say, once I finish building this part, I will deliver it to you and you will pay me $2. That's a backlog. And what Rocket Lab is saying is they have $1 billion of backlog, 44% of which will be recognized in the next 12 months. Let me say that differently. Their current annual revenue is 400 million. If they stopped selling today and fired all their salespeople, their next year revenue will be 440 million. So they can grow by 10% by firing existing salespeople. And anybody they have, any sales they make, is going to increase their sales beyond that for a SaaS type operation where they have some of it launch and some of it SaaS. This is music to the ears of any CEO or CFO. So I personally like the numbers behind this company. You have to do your own due diligence. So what did I do with my trades and my next steps? My fixed income portfolio, especially on the agency bond side, is evaporating. Most of my FHLB bonds are getting called left, right, and center. But when they do mature, I turn around and put them largely in treasury bills that come right after the election because I expect some level of drama towards the end of the year. But when it comes to equity, I did divest two of them. One is my favorite kefir that I talked about. I made my money, thank you, Lifeway. And I did exit TK Tankers because they made some noise about share repurchase and they're not happy with the share price, and the price of a tanker mile, as it is called, has been going down. And they recently had a very strong day, and I got out right then for a profit. So what do I still have? All of them in the food, pharma, gold, and military. So Elite Pharma, they make the non-addictive medication. That's a pharma. Intuitive Surgical makes robots. I have what I call climate, which is really construction and rebuilding and home building and things to, in that nature. And I have food stock, which is Calmaine. And I have some gold, which is an American gold miner. That's an interesting play, in my opinion, there. It's not Rio Tinto. It's not somebody that has to depend on a foreign government to give permission to mine. It's a US-based gold miner. No debt. Check them out. As far as new buys, these are all new buys. I bought Louisiana Pacific, and before that, I bought Costco. I've already had ITCI for a while. I call Louisiana Pacific again a climate stock, even though they make wood. And as I mentioned earlier, when a house has water damage and you have to rebuild it, you're going to buy siding. 10% of all siding sales is Louisiana Pacific's newest product. And unfortunately, climate change is going to bring them sales. Military stocks, I now have three. I bought Woodward, which is in the aerospace and military area. AeroVironment, which also makes military Predator drones. And last but not the least, yes, I bought Rocket Lab, and I'm hoping for the best. You make your own decisions. Share what they are with me if you would. Thank you for watching Yield Nerd. Have a good day. Thank you for listening to Yield Nerd, a do-it-yourself show for yield accumulation and management.